Alright, what's up everyone? Welcome to the video. In this video we're going to be talking about the S&P 500 and its price action looking forward after Jerome Powell spoke today and his interest rate decision looked like it killed the markets. As you can see by the hourly candles here, this is a big sell-off after Jerome Powell spoke. Now, I was expecting a move like this, but you can see on the 1 minute candles how it got a little choppy. We had a nice little uptick. I was almost thinking about covering my short play for the day, but good thing we did not need to do that because this was a big sell-off. The shorts definitely made a lot of profit today. And here you can see over $1 billion exited the S&P 500 today after Jerome Powell spoke. The market started in the green, SPY was really in the green, and then it just completely went red with over $1 billion selling off. That's a big outflow of capital. And here you can see how the major treasury yields are officially completely inverted, the 2-year, the 10-year, and the 30-year here. These are the important treasury yields to watch. When the short-term time frame is yielding more than the long-term time frame, then that shows that investors are expecting less growth in the future, hence less inflation. And a lot of people equate a curve inversion, a major curve inversion, to a recession that'll happen in the near future. This is not the case every time, but it does happen often when a recession occurs. One positive note, I believe, that will provide a little certainty among all of the uncertainty in the markets lately is the fact that the Federal Reserve mapped out expected interest rates going forward. In the very short term, basically, the Federal Reserve is seeing interest rates above 4%, well above 4%. And not until around third quarter next year will we get below 4%, and the following year will be below 3%. That is what they're expecting. Of course, they have been wrong before, they have been right before, but this is basically what they're planning out. So keep an eye on inflation data. These numbers could change possibly, but right now we have to go with the Fed. They are smart guys, so we got to go with the numbers they're giving us. And in my opinion, I think this is a bullish aspect that they are providing certainty and mapping out interest rates for us. So keep an eye on inflation. If inflation significantly starts to slow down, then we should see some upticks in the market. But who knows how far off the uptrend will be. This might be a while. As Jerome Powell said, the interest rates will stay high for a while until inflation is obviously turning around. So it's looking like the market wants to take another leg down, so let's find the areas we might get some resistance or some support, some friction on the way down, possibly a reversal. I doubt it at this point in time, but you always got to watch those support levels. Anything could happen. The market does whatever it wants. So the first 3 support levels we got to pay attention to here. The first one here is a major Fibonacci level. It's around the 375 area. This is a long-term fib level, so this one's an important support level to watch. The next support below that is the previous lows, the previous 52-week lows in the S&P 500. That's around the 362 level. You could call it 360. Also, 365 is where this doji candle closed. You could watch that level as well. And the last support level to watch is around the 344 level. I've heard a lot of analysts on Wall Street calling for this bearish support level here. They believe we are coming down to that level, and on the long-term picture, actually, let me show you. So when you take a look at the monthly candles here, you could see that that 344 level perfectly coincides with the previous highs on the long-term picture here from this previous consolidation zone here. So this is probably one of the strongest support levels to watch. Support from a previous high is a textbook support level if you don't know about technical analysis. That is one of the first things you will learn. So if price does drop below all those previous supports I mentioned, then definitely keep eyes on the 344 area for sure. But always remember, the market will do whatever it wants, so keep an eye on these support levels, keep an eye on inflation data, especially if inflation data is going to be released where the price is around these support levels. Definitely keep an eye on that. And I should mention one of the scariest things Jay Powell mentioned is he hinted towards the housing sector taking a deeper correction or being affected even more negatively by these high interest rates. So all of you homeowners, do not sell your house at the bottom of the housing market dip. Definitely watch out for that. And that's basically all I've got for this quick update on the S&P 500. If you like what you hear, definitely hit the like, hit the notification bell, subscribe, all of that good stuff, and leave a comment if you want me to map out some technical levels on a ticker symbol that you've been watching. I can do that for you. And if you have any comments of any suggestions, any way I can improve my comment, I'm open to that. So I will see y'all on the next video.